before I get into the video, come to ztrades.net, check out the terms and conditions page as well as the disclaimer. If you agree to it, you're welcome to come to the Discord. It's completely free. It's on here on the home page. Nothing I say is financial advice. Let's jump into this article I wrote at the beginning of January. I'm seeing some typos up there in that title I don't like. I'm going to have to change. Which stocks and sectors would I be looking at if World War III broke off? Is that tinfoil conspiracy? It's not. China wanting to take Taiwan. NATO wanting to go to war with everyone for no reason at all. Finland joining NATO. There were comments made on Thursday. You can see what happened to Lockheed Martin. That Ukraine will be joining NATO. That would be a horrible thing, right? What needs to happen is peace, because rate hikes aren't going to do anything to inflation when the government prints money for war. It doesn't work, right? Look what happened after with the war in Iraq. What helped lead us into the crash. That wasn't all of it. That was a little bit of it, right? I'm getting off topic here. Subprime loans, all the vapor stuff, right? But what would I be looking at if, and then we have Israel. If it's a Middle Eastern war, if it's going to be China versus Taiwan, if it's going to be NATO and Ukraine versus Russia, what would I be looking at? Number one, if it's going to be NATO versus Russia, I'd be looking at uranium stocks. I'd be looking at just anything commodities based, anything commodities. Let's take a look at it down here. I would be looking at URNM. I'd be looking at CCJ and X. Metals, maybe. Silver and gold will run, but, URNM, that's something that I personally believe, doesn't mean it would happen, could see 100%. CCJ could go absolutely parabolic, especially URNM. I would also be looking at Lockheed Martin. Defense stocks, Boeing's in there. Boeing does other stuff that isn't solely defense. Lockheed Martin, that's like what they do. And that will react the most. Same with RTX and NOC. Boeing, yeah, it'll go, but there's a bunch of drama with Boeing right now. They also do stuff with the commercial. It's not all just military-related stuff, which is why I would be looking at Lockheed Martin. And of course, you watch, it would happen over the weekend or after hours when you couldn't hedge the fact that you may be negatively affected by a war by buying calls or a spread on Lockheed Martin. Some people may think that that's morally wrong, like you're profiting off war, but it's more, I would view it kind of opposite. I would view it as my money is at risk and I'm going to manage it. Where's the best place that I can manage it where it's almost like a hedge that war would be breaking out? That's how I would view it with an options play, which would be Lockheed Martin. Depending on the TA, right? There's fundamentals here. And it depends. But the second, there was going to be a peace treaty overnight, that thing, in a heartbeat, that thing would drop, right? There's ways we can play upside and downside on that. If it's going to be China and Taiwan, I would probably be looking at TSM. May not be affected. They have that factory, the massive factory they're going to be building here in the U.S. But I'd also be looking at China stocks as well. If it's going to be a Middle Eastern war, that's a little bit easier, right? Because let's just take a look at we'll take a look at CL over here. During the Gulf War, this is the Gulf War. This is 1990 to a little bit after 91. This is a monthly chart. And I'm going to explain why I'd be looking at oil, and oil could have energy stocks could have a massive explosion. Because I've seen it happen when what I'm about to explain happens. I've seen it happen, and I've watched CL/CL crude futures. I remember I was sitting in the parking lot of a Burlington coat factory at 6, and it was sometime in the winter, and it was when Iran had I'm not going to say the word, begins with an S. I got to obey YouTube. Drone, S-drone. You fill in the word, knock 1/5 the world's oil supply off by crashing into one of the oil sites. Word's not coming to my head right now, in Saudi Arabia. And I mean, CL exploded. And I happened to be in some XOM calls, or Oxy was one of those, and they had just went nuts at open the next day on Monday. But we ripped for 3 months. We hit, I'm pretty sure during the Gulf War, Iraq's energy fields because it cripples them. Right? It's not like, Russia or America where we've got everything: iron, copper, silver, coal, lumber, and energy, and it's spread all over the country. They have like oil sites, massive ones right there. They're hit, they're crippled. The money just comes to a grinding halt. It's just dry desert with that. It's not like Dubai where they have, they're doing it kind of like the West with, they're making money through businesses that are there and, tourism and other stuff like that. No, you hit their energy fields, they're crippled. It's over. Their economy comes to a halt. So we had hit their oil fields and it ran for 3 months straight. There's a 1, 2, 3 reversal. I can only imagine calling your broker back then in 90 and doing options on futures. I can imagine how bad the spreads were, or doing futures plays on this. Playing the upside and the downside when it looks like they're going to be losing the war and they're about to sign a peace treaty, playing the downside with an advanced futures strategy or options play. I mean, it fell 1, 2, 3, 4 for 5 months. It fell. That's for a half year. I mean, that's wild. Playing the upside as well. I'd be mainly looking for the downside. Because people would only be looking for the upside play here, and they'd be holding it till it dropped, and buying the top. I'd be buying it when it starts to peel over, and you can judge that. It'll tell you, the news will tell you, okay, it looks like they're going to sign a treaty to end the war. There you go, So that's what these Middle Eastern countries will do, is they'll cripple each other's energies, their oil supply, the main driving factor of their economies. So, Middle Eastern war, I'm looking at oil stocks. I'm looking at Ford/CL when that comes to, playing options on futures possibly, some advanced option strategies, some debit spreads, maybe some other stuff. I'd be looking at, XOM. I'd be looking at Oxy. I'd be looking at CVX. I'd be really wanting to see, because, you would think whenever they hit energy that it would drop, right? If I was an amateur trader, I would think that it would drop. Well, that's where supply and demand comes in. Well, if there's less supply and the demand is still the same, well, what do you think that does to the price of of oil? Right? It goes up. So if there was an attack on our soil, the stock market would be within maybe 30 seconds would be halted. It would drop so fast, it would be halted, and they probably wouldn't open it to the next day. I mean, World War I, they halted for a long time. I'm pretty sure because it was dropping so fast. They're like, let's just stop this before it ceases to exist. So, there's an attack on our soil, aftermarket, during the market. I mean, it would drop so fast and be halted. You would have to be in front of the computer like right then and there. Even moving my hand to the mouse to change the screen and type in SPY, and I may even miss it doing that. It moves so fast. So I would be looking for gold and silver because they have generally always been fantastic through war times. And one of the reasons I believe that is number one, it's a safe haven. Number two, they're going to be printing money like mad. If we got attacked on our soil, they're going to be printing money to fix it eventually. And if there's going to be war, what does that do to the dollar? The dollar falls. What does that do to metal? Metals go up. The dollar and metals have an inverse relationship. So I believe that metals would go up. I wouldn't be looking for metals wouldn't be the number one play just because everyone's scared and everyone goes there for. No, that's not why I'd be going in. And I believe that it would be rising not because of fear. People say that really don't understand it, but it may lead to money printing, and that's why it would rise, because the dollar would fall. I don't see the dollar going up. If we got hit, it would fall, meaning metals goes up. Not it's a flight to safety, and that's why it went up. That may be a little bit of it. The main part is that the dollar would probably fall, right? So again, let's do a recap here. If it's an attack on our soil, I don't think that's going to happen, guys. But for the sake of this video, I'd be looking at metals, as well as energy. Just about any war, it would be energy. If it's going to be Ukraine's going to be joining NATO, Definitely don't want that to happen. I want a peace treaty to be signed and them to remain neutral and not join NATO, because I don't want World War III, and I'm sick of inflation and everybody suffering. Then I'd be looking at Lockheed Martin, as well as some of these commodities. URNM, CCJ, there's some others as well. If it's Taiwan and China, I'd be watching TSM, and I'd be watching China stocks for the downside. And if it's going to be a Middle Eastern war, energy all the way. During the Gulf War in 91, we talked about what really led to that spike in energy, because we hit Saddam's oil fields. He's a big oil producer. The S&P Energy Index rose by over 20%. During the Iraq War in 2003, the S&P Energy Index rose by 50%. Let me explain why. During the Arab Spring in 2011, the S&P Energy Index rose by 10%. Now, the reason why in 2003 why it rose 50% was I was just looking at I was looking at CL, and it definitely went up more than 20% here. I'm pulling this data somewhere. I'm seeing something that's off on that chart that I just showed you guys. That definitely ran a lot, but this may be referring to the stocks that are in the S&P index. But back to where I was, which I've lost now. I'm going to come back to this in a second here. Here we are. Yeah. During the Iraq War in 2003, how we hit Iraq's energy fields during the Gulf War, right? In 90 and 91. Well, Saddam set fire to his own fields in 2003. He didn't know that we had. He set fire to his own fields, trying to disable operations, so that it would be hard to find his military, and with our planes and everything, seeing everything, and helping guide the military, as well as us hitting his own fields. So in both scenarios, what I'm trying to say is their energy fields were hit, knocking a whopping amount of energy off the market, disrupting the supply, the global supply, leading to a supply and demand crunch and the price of energy going up. During the Korean War, the price of copper increased by over 200%. During the Vietnam War, the price of steel increased over 100%. Iraq War, uranium prices increased over 200% between 2003 and 2008. World War II, that's another world. World War II, the price of gold increased by over 300% between 1939 and 1945. So if you guys want this article, you can come over to Z Trades and go to the blog section up here at the top, and you can filter it, crypto, dividend, stock market, and check out what we have in here. I have some pretty good reads. So if you guys like this content, make sure to like and follow for more.